All right. Good morning, traders, and welcome to the opening bell. Today is Thursday, August 6th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. It's still a bit tight in FX land with most of the weekly opening ranges intact on the US dollar. We did get a massive breakout, finally clearing that multi-month, multi-week consolidation in gold. And certainly oil prices still remain pretty subdued. So we'll go over a quick reference of all the US dollar crosses, gold, oil, nothing really to update on Bitcoin. Meanwhile, equity markets are continuing to charge to fresh new highs. Any questions or trade setups, feel free to throw them on the message board. We'll be getting started in just a second. All right, great to see everyone here in the room. Acacia, Angie, we got Ashish in the room. James, Yana, Ken, happy Thursday to you. Latanya, always a pleasure. Ruth, Scott, Seth, Terrence, great to see everyone this morning. Here's what it looks like on the DXY, all right? We hobbled right off support into the start of the week. The range is exceptionally tight. You're talking about a 0.6% range for the week, but the entire weekly range is preserved right above lateral support. Remember 99.41, 99.49, the objective January swing high, a 38.2 retracement of the entire yearly range. Really nice pivot in price. We're poised for a breakout. We're sitting just above that. So nothing really changes on the DXY setup. Resistance is still 100 spot 15 into 35. Broader bearish invalidation is up at 100 spot 77. Anything beyond 99.41 on a downside break opens up that 200-day moving average with key support down at 98.68, 98.69. You're talking about the objective August high day reversal close from last year, as well as that swing low from May. So the levels are well defined. Momo's flattening on all of these setups, so we're not really getting much of a momentum trade here early in the week. Nonetheless, the weekly range remains intact. We're looking for that breakout. Euro, right below resistance. The weekly range high, which executed right on Sunday, was the exact high we registered yesterday, putting into focus, again, a basic weekly opening range trade. Now, for the euro, I did give you guys an update on this on FOREX.com. This is actually pretty clean, okay? The uptrend that we've been tracking off of the June and July lows, look at that upper parallel, just uncanny, okay? Capping all of the advances since last month. And again, a very clean weekly opening range preserved into Thursday. Now, tomorrow we get the release of the non-farm payroll report. We're looking for a print of 80,000 off of a previous read of 57. The ADP yesterday did come in weaker than expected. Initial jobless claims continues to really just gangbusters, but we're continuing to see this low hire, low fire environment. It's going to be interesting to see how the non-farm payrolls print comes out tomorrow. We're expecting unemployment to hold 4.2%. As always, we'll be looking for any shifts in the labor force participation rate as a caveat to any moves in the unemployment rate. But all things held constant, we're looking for a print of 80,000. Next week, by the way, we do get another update on inflation. Consumer price index out on Wednesday. That's expected to soften slightly. So a welcomed expectation for the Fed. You had multiple Fed members, Lisa Cook, you had Neil Kashkari yesterday, all coming out saying, hey, we're ready to raise rates. And if you look at the Fed fund futures, guys, they're going the opposite way. September expectations continuing to dwindle, now at 44%. So a mild expectation for a potential move in September. 44 expecting that we're still going to hold at 3.5%. October starting to get a little bit more towards the 70% camp of at least 25 in hikes. December, interestingly enough, you're still looking widespread expectation, right? That we're going to see at least 25 basis points. You're even looking at expectation here somewhere in the 60s, 70s that you might even see 2 rate hikes. So that's taken some of the wind out of the US dollar sales, and it's going to be critical tomorrow if we get a healthy labor market print that really it's sort of clear track ahead for the Fed to have to raise rates if they see fit. If we see employment weaken, and that's the threat, guys. If we get a weaker than expected print on non-farm payrolls, that could curb the Fed's appetite, willingness, whatever you want to call it, for higher rates, right? The dual mandates, price stability, and maximum employment. You can argue for the last couple of months that we're somewhere in the range at 4.2% of maximum employment, but certainly if that outlook starts to dwindle, could hit those hike expectations and again, further dent the dollar. So tomorrow's print could be a scenario where good print, good dollar, right? Bad print, bad for the dollar, which is kind of the inverse of what we've been seeing in previous months. So we'll see how that pans out tomorrow. For the euro, you're right up against uptrend resistance. The lateral level that needs to actually break for us to fuel the next major leg higher is 1576. That's the January low. That's the May low. Nice pivot in price. Above that, the 116 level is just a basic 1618 extension off the low. It's stacked if we break here. You got 1609. I talked to you about this yesterday. The 200-day moving average is right at 1630. And then 1649 is the 618 of that April decline. So checking uptrend resistance in the euro today. Here's sterling still holding that major pivot in price. This level, you guys are probably sick of hearing me talk about it, but the objective yearly open, the 618 of the drop from May, that February low day close, all of it has been a major pivot in price all year long. We did that reversal candle right into the start of the month, which took us back below. And here we are again, struggling at that pivot. Look, yet another US dollar cross with a well-defined weekly opening range, still poised, excuse me, and intact into the close of the week with non-farm payrolls on tap tomorrow. So key support, bullish, near-term bullish invalidation. Remember, we noted 33.98. It's a basic 38.2, the advance off the low. That's the 200-day moving average, converges on the 25% parallel. Break below that would suggest a more significant highs in place. The weekly opening range high converges on the May 25 swing low, and that break above 35.09 would really launch us into the next objective target at 35.91. That's a big level, by the way, 35.91. That's the 618 of the yearly range. That's the May and August highs from last year. May, August, 618. So again, a trade where the levels are really well defined, weekly range is preserved, especially in sterling. The weekly range is defined by Monday's candle. Very, very simple setup here, guys. It's early in the month. We're in the early throes of the monthly opening range, and this directional break will either confirm a pivot above that yearly open zone or rejection with that 200-day break take us back towards support. So unfortunately, sterling still doing this really tight song and dance right around a major pivot zone in price. Here's Aussie, still struggling here. So yeah, we've been talking about Aussie. I remember who was talking about this yesterday. It was this Acacia. We're failing at uptrend resistance. This was a potential break of the weekly opening range high, fizzled out real quick, and we just pulled back lower. Now, look, we're sitting at the objective monthly open. So we are unch for the week, essentially, on Aussie. If Aussie is heading higher on this stretch, the same thing we said yesterday, guys, pullbacks need to be limited by 70. Next level up is 70.83. You got the 100 off the low and the 1618 off that initial thrust from the June low. Both of those converge at 70.83. Next level up, 71.20 is the 618 of the yearly decline, or excuse me, the decline off the May high, which was the yearly high in Aussie. So sit tight. Again, losses need to be limited by 70 if this is heading higher. But Aussie, no major event risk on tap. Look for the US dollar to be driving things. The formation still looks really clean. That 75% parallel has been picture perfect resistance. A buckle below that 70 handle would necessitate a break below the 25% parallel. That would invalidate the up bias. The weekly range low, the monthly range low, 69.84. Right below that, you're basically looking for a potential drop back towards that 200-day moving average. So Aussie really needs to build and start to stabilize above 70 here if that breakout from the April downtrend was legit. All right. Again, on the daily chart, that 70.82 level, really critical, right? That's former slope support turned resistance. So this is going to be your next major upside target if that 70 level holds support over the next few days. Dollar CAD. Sitting tight. Remember, we adjusted the slope yesterday. I'm starting to think that probably wasn't the most effective adjustment. If you take it into to the shift slope here, it may be a better trade. But listen, it's getting messy. At the end of the day, I'm just looking for a break of the weekly range. That Monday, Tuesday stretch is still in play. You're right at the monthly open here. So it's the inverse of Aussie dollar. That's all I got to say. That's dollar CAD. So dollar CAD and sterling still remain our two least favorite setups because the threat is, let me just take this back a second, guys. The break below the median line. And here, yesterday's out, it wasn't really an outside reversal. The high was 40.80. The previous day's high was 40.80 spot 4 or fractional 4. So really close to an outside reversal, but that rejection and slide back below the 25% parallel threatens a test of the lower parallel, if not a basic 38.2 retracement of the entire yearly range. So you're hanging on to last month's low right here. I think the risk here is still for a drive down towards 39.55, 39.40, September high day close, October low day close, the 2022 highs 39.77. So I'm not really just married to this slope. I'm kind of looking to see if we get that final drag for a test of more lateral, more significant technical support, just a bit lower. You are seeing that momentum is just flatlining here above 40, which again is kind of giving the indication that if we were to turn from these levels, if we mount 41 on the upside, that would be your quintessential momentum profile change, right? Strong uptrends, we want to see support at 40. Strong downtrends, we want to see resistance at 60. We just came from well overbought conditions for almost an entire month. So a hold at 40 here from a momentum standpoint would suggest the broader push still remains in favor of the bulls. So watch this one closely. Again, sterling and dollar CAD both on the watch list. Dollar yen still at that pivot zone. Nothing changes. We've been talking about 57.90 into 57.70 for the longest time. 2025 high day close, November high. Got the 200-day moving average there as well. Ever since that buckle into the final day of July, that's been resistance for a fourth consecutive day. Even if we were to break higher, 58, 57, broader trade still is, the risk is lower below 160.36. It's not going to really help us right now, but the focus is on what happens here. If you get this pop, again, not really in my cup of tea here to try to play the long side in dollar yen, but you could see an extended push a bit higher. The Japanese officials and the coordinated intervention risk still there. But keep an eye on that key pivot. Objectively, if that breaks tomorrow, that would be a breach of the weekly opening range. That would be a breach of a major pivot in price. Again, objectively, right? No one's going to deny that. And a slip back above that 2025 trend line. So does that give us a larger recovery scenario? Potentially. All things held constant, dollar yen is still trading right below resistance for a third consecutive day. All right. Swissy, weekly range is preserved double, okay? This is the cleanest setup probably out of all of them. I put this one, Euro and DXY, all in a very clean weekly opening range. Doesn't get much cleaner than this. Here's your weekly open. You set a low, you set a high in the first day of trade. You test the low, it held, you're trading right below the highs. I just shot a video for StoneX TV on this, guys. Very, very clean setup. Look, at the end of the day, you're testing the median line. I want to show you two things. I'm going to take you all three time frames here. Swissy on the weekly chart. So the focus range or the focus pivot zone since last year, 81. You all know about that level. Just wanted to highlight this multi-month yearly advance still in the confines of this ascending formation. We turned from confluent resistance last week. We've been sitting at the median line all week long. The weekly range is set right below 81, right above slope support. Very tight range. Look for the breakout. Daily chart highlights the fact, again, that we're sitting right along that median line. Right? Here's resistance. We extend it into 81.24 to account for the August high close and the November high from last year. All converge right here on this pivot zone. That's the weekly range high and resistance. So we're sitting along the median line. If we break below this median line, you're threatening a test of uptrend support. So it would threaten a larger setback within the yearly uptrend. Broader bullish invalidation is at the yearly open. It's at the 200-day moving average. You're talking about 79.31 to 79.27. Losses below this level would suggest a way more significant highs in place and a broader trend reversals underway. Strength beyond 81.25 on a daily close basis would threaten another test of the highs. So the levels are well defined, momentum flatlining right at 50, straddling 50 for the entire week. Drill down deeper. 4-hour chart. This is the slope we've been tracking on the 4-hour chart for the last few weeks. This is off the highs from April 30th and the subsequent low that we did, not the actual low, but the subsequent low we made right into the close of May. So the interior levels here have been really well defined. Here's the pullback. Here's upslope support converging on this week's low, 80.56, and the January high, 80.41. The slope is right in between there. So a confirmed break below 80.41 would suggest a bigger correction within the broader uptrend. You're looking for 80.09. That's the April high day close. Very nice pivot in price. Really nice to those lows we made in July as well. And then again, the 200-day moving average converges on the yearly open. I'd be looking for a larger reaction there. That's the if this breaks, right? Trading is an if-then proposition. All things held constant. You've set a weekly range right above uptrend support. If dollar Swiss is heading higher on this stretch, losses would need to be limited to 80.41. You need to close above 81.25 to mark resumption. That's the assumptive trade based on the technical structure we're in. Okay. Again, here on the daily, on the 4-hour chart, momentum right at 50 again. So this one's poised for the breakout. Look for tomorrow's NFP to potentially be the catalyst we need to get this thing going. One of the cleanest setups, waiting for a weekly opening range break on Swissy. One cross pair I caught my attention yesterday. I just want to bring up here in the room. We don't typically look at it, but Aussie CAD, specifically with the Canadian dollar, it's kind of being a mess, and Aussie being a little bit of a cleaner trade. Here's Aussie CAD. I want to show it to you first on the weekly charts. This one is a multi-month range, and it's poised for a breakout. It might not be imminent over the next few days, but I just wanted to show you where we are in trend. This is the weekly chart, okay? It's been gangbusters since the start of the year. That rally failed at the 2021 high close, okay? Uptrend resistance. This is 75% parallel to the pitchfork extending off last year's low. And then initial support is at the 618 of the broader decline from 2012. That's the 618 retracement. Okay. We broke through it. We tested it as resistance all throughout February and March, broke through it in April. It's been support ever since. So you have a contractionary range right below lateral resistance, right below uptrend resistance. Okay. Momentum here still is pretty constructive, but you're kind of stuck below that trigger. So watch that slope. That's from the weekly charts. You drill down deeper to the daily chart. Look at this multi-month range. This whole range is trading within the objective May range. 3 months later, we're still into that contractionary range. A series of higher lows, a series of lower highs, highlighting 2021 high day close is 99.21. This year's high day close is 99.50, 99.49. So a nice 30 pip zone of resistance here. And within that 30 pip zone is basic slope resistance. That is to say, we need a confirmed close northbound of 99.49 to fuel the next major leg higher. You got the 2021 swing high at 99.94, the 786 retracement all the way up at 102.15. On the flip side of that, if we break below 63.56, this zone right here, that would nullify a downside, or that would give you a downside break of this multi-month formation. We'll be looking for a test of slope support. We'd be looking for that 200-day moving average. But I just wanted to keep this in mind because this is a well-defined consolidation pattern, a multi-month range. When this inevitably gives out, it's likely to be a decent directional trade for some time. Also, momentum, reinforcing the guidelines that we're always looking for. Ever since the low, or ever since I should say the high you made in May, resistance ahead of 60, support ahead of 40. That's your quintessential range trade. When we see a breakout of this price range, when we see a breakout above 60 or below 40 in momentum, that should give us clear guidance on the next major move. Chandra says, does Aussie CAD look like a triple or quadruple top, Mike? Chandra, let me say this. You guys, I don't want to beat you up, but whenever we're looking at double tops, triple tops, quadruple tops, quintuple tops, whatever you want to call them, Chandra, they have no bearing whatsoever lest the downside break. My problem with technical formations like that, which are very helpful, we need to recognize when we're looking to identify them. If we were to break below this zone, Chandra, sure, that could be a triple top. And in that case, you have a measured objective. You take the range from high low of the formation. You look for the 100% extension of that range. So the equal distance of that stretch to the downside would give you 99.49. So the point of identifying double, triple tops is to find this objective measured move. My problem with that is every time markets try to test resistance and pull back, retail traders will start to say, oh, it's a double top. No, you can't even say the terminology double or triple top until the bottom end of the range breaks. If we start looking at every single test of resistance, oh, this might be a double top, we're going to get caught making some really poor decisions. So Chandra, I don't mean to harp on that, but it's really important that we recognize when those formations are actually going to be something that offers some guidance. Right now, there's no bearing on this less 97.56 give out. Does that make sense? Just want to shift your focus a little bit on how we identify those formations. So if the downside gives out, sure, absolutely, that would be a decent move. You could even say, by the way, this would be a lopsided head and shoulders, left shoulder, head, right shoulder. There's a million different ways to look at it. None of those formations even have any merit until the downside breaks. Thank you, Mike. Appreciate your insight. No problem, Chandra. Good question. I mean, there's no bad question here. Ask them, but we want to make sure we're staying objective in our analysis. All right, so that's Aussie CAD. Interesting set. Keep an eye on it. Gold. Woo-wee. Guys, can't make this up. First level of resistance we highlighted in the major reversal here. Let me take you back to the weekly charts on gold is right here. The objective yearly open, the 52-week yearly moving average, downtrend resistance, uptrend resistance is all right here. It's all right here. And on the initial breakout, we highlighted 43.19 into 44.91, which is the 200, into 43.04, which is a 38.2 retracement of the April decline. That was our first major level of resistance. We just tagged it. Guys, today's high was 43.04. You can't make this up. So look for some kickback here, curb your appetite on the long side. It's definitely a breakout of last month's opening range. It's definitely a breakout of this 7-week long consolidation. But right now, this is the first major resistance zone on that breakout. Drill down deeper. Here's the 4-hour chart. Remember, we threw on this pitchfork yesterday. I was telling you guys there's no conviction on it yet until we get some touches of the median lines. And guys, it's been pretty clean. Here's the breakout. We paused right there, broke through, okay? Yesterday after the webinar, here's the stretch, 43.04, 43.19, 75% parallel is right there. Here's the kickback. Now, the median line, we turned right ahead of it. So what does that mean? If we close above 43.19, that's the resumptive move. You're talking about 43.66, which is the objective May low. And then the 200-day moving average converges on the 618 and the 2025 high day close. That gives you basically 44.91 into 45.33. So really nice trade here. We're in overbought condition. The bulls still have it. So if gold is heading higher on this stretch, pullbacks need to be limited to 41.65. You need to close above 43.19 to mark resumption, looking for 43.66 and 44.90 into 45.33. As always, guys, not a trade recommendation from FOREX.com or StoneX, just my humble interpretation of what the technicals are suggesting at this moment. But boy, oh boy, this has been a really clean trade. Questions on gold. Has implications, obviously, for tomorrow's FOMC, tomorrow's non-farm payrolls, the NFP print. because again, if we see a shift in the interest rate expectation, that could dent gold, right? But at the end of the day, clear-cut technical breakout, initial support aujourd'hui, today. Look for that median line. If we're heading higher, need to see losses ahead of 41.65 tempered, topside breach above 43.19, mark resumption. But this is a major lateral level in price, and we want to use some caution here on the near term. Make sense? Finally, 7 weeks later, I haven't written a piece on gold in like a month, and then I wrote 3 pieces over the last 4 days. So finally getting some play there. Okay, nothing really to update on oil. All right, we're still holding below the 200-day moving average. I gave you guys that as resistance yesterday, just a bit higher as the 618. That's still kind of the zone I'm looking for. Bearish invalidation is right back at 79.16 to 80.75. Any rallies we need to be limited to here if the technical structure is to remain bearish. There was an announcement that came out earlier that there is going to be an announcement, or I guess a scheduling that there is going to be an announcement from with regards to an agreement with Iran and Oman as far as the Strait transits are concerned. So markets are taking this in stride and working with like best case scenario as far as I'm concerned, right? You see equity markets just ripping. We've held those resistance levels, by the way. I'll go over those in a moment on the S&P, and that hasn't broken just yet. But for oil, that's the max resistance we would need to see, 80.75. Next key level of support, that doesn't change, 71.80, 71.50. You're talking about this is basically just, we don't need that anymore. Actually, it's just the weekly open. But the August 2025 low day close, the yearly open from last year, both of those converge on downtrend support basically into tomorrow near 71.90s. All right, nothing to update on Bitcoin. Still holding uptrend support. Monthly open is going to be critical. That's 62,800 essentially. You need to break below 61,244 if we're going to resume the downtrend. All things held constant, you're holding monthly, you could say multi-month, but monthly uptrend support. Still looking for a reaction off that zone. Need to break above 67,322 to mark a more significant lows in place. Okay, quick look at the equity markets just to update on what's been going on. So here is the weekly chart for the S&P 500. Let me show you the daily chart. Out of the 3 indices, the only one I track on a daily basis. But here's what the daily chart looks like. Just wanted to highlight, man, the level we talked about, or the initial breakout zones, the first level was 67.77. We made short order above that. That's now near-term support. The second level was 77.50. We have not closed above that. Okay. Yesterday, intraday, we were trying to make a strike. I was telling you guys to watch the close. We did settle and close below it. So near-term resistance, any way you slice it. Okay. So watch that level there. Initial support, 67.77. If we're heading higher, losses need to be limited to 75.77. Topside break from here, 78.81. This is a 1618 extension just from the advance off the June low. So 1, 2, 3. That's the 1618, 78.81. It's your next upside target if we were to break 77.50. Beyond that, 80 all day long. We heard, I saw a headline earlier today that Tom Lee is suggesting that we could see 8,000 before the close of August. I don't think that's a wild call. If this break is legit and we're able to maintain 75, 77 support on any meaningful pullbacks, yeah, that's an easy target. And that converges on upslope resistance ahead of the August close. So, you know, the headlines ran with that as if it was some far-fetched idea. I don't think it is. But all things held constant, that, you know, pullbacks really do need to be limited to that 75, 77 level. Okay, so a little bit of a hesitation here near resistance. Watch the weekly close, by the way. If we weekly close above 77.50, all bets are off. You're still looking for conviction, upside move. Momentum above 70 with price above 77.50 on a weekly close basis. That's fuel in the fire. Non-farm payrolls are on tap tomorrow. All right, NASDAQ also looked like we were breaking through that 618 retracement yesterday, and then now we're back below it. This is the weekly chart. So that's going to be the test for the week here. If we're able to close northbound of 29,392, momentum is sneaking above that momentum trigger I showed you. But again, the weekly chart has no merit until the weekly peg or until the weekly candle closes. So this break looks pretty convincing, but doesn't matter till tomorrow's close. That's going to be the conviction. So all things held constant, NASDAQ is checking resistance right now as we speak. We need tomorrow's close northbound of 29,392 to keep the upside in play. Key resistance on the NASDAQ, the record high close, 30,406, remains in focus. Constructive above 28,196. Okay, drop this level here. Last but not least, Dow, strongest of the bunch, is the only one that looks like a much more conviction topside breakout. Again, we need to close the week above 53,880 to validate that, but a breach of uptrend resistance, multi-year uptrend resistance, certainly suggests that the upside remains in focus. Momentum well into overbought condition. We don't want to get cute. That's when the traders and the bulls have the most push behind them, and that keeps this thing constructive. Watch the close above 53,880 to maintain that upside bias in the Dow. All right, 10:01, 1 minute over. Do let me know if you have any other questions or trade setups. Otherwise, we'll wrap it up here. Stay nimble. Most of the weekly opening ranges are preserved as we head into tomorrow's non-farm payroll report. And we'll be looking to see if that offers a catalyst to break out of these ranges, namely DXY, very clean range, Euro, very clean range, Aussie, not the cleanest range, but support needs to hold 70 if we do get a knee-jerk reaction. Dollar Swiss, very clean weekly opening ranges. We're looking for reactions out of all of those tomorrow. Gold on that advance, need to hold back 41.65 to remain constructive. Need to close above 43.19 to fuel the next upside. All right, it's a quick run through to wrap things up. Best of luck trading. Stay nimble until tomorrow. We'll cover everything after the release at 8:30 Eastern, right back here in the opening bell at 9:30. Till then, again, best of luck trading, and I'll see you tomorrow morning. God bless.